The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum. Investing in Jamaica.
Go forward.
Good evening, ladies and gentlemen. I'd like to welcome you to yet another episode of our weekly Investor Forum. As usual, I'm your host, Dan Theox, Senior Vice President of Investment Banking. Today we'll be discussing JMMB Group, and who better to join us other than Keith Duncan himself, the Group CEO. Welcome, Keith.
Thank you so much, Dan.
Always a pleasure to have you. And please accept our apologies for the absence of our Chairman and CEO today.
For sure, that's fine.
If you like the content, don't forget to hit the like button and share this video. And if you haven't yet subscribed, hit the bell to receive all notifications, because we upload content just like this once about every week. It's about time that you embarked on your very first investment journey. Patience wins the investment game, not speed. That means the earlier you start, the better. Why not take that first step with Mayberry Investments Limited and follow us on social media to get started. Don't forget that we'll have a Q&A segment at the end of the program, so make sure to submit your questions so we can address the same at the end of the program. Now to talk about JMMB. Jamaica Money Market Brokers Limited first opened its doors on November 1992 and was the first of its kind in Jamaica. 30 years later, the company has evolved from a single operating entity to the JMMB Group. Now a financial services group of companies, it serves over 460,000 clients and their families in Jamaica, Trinidad and Tobago, and the DOMREP. The group continues to deliver personalized financial solutions across banking, investment, and insurance brokerage services. Its group CEO is none other than Keith Duncan, and he's the executive director of the group of companies. He has responsibility for the overall performance and the charting of the strategic direction of the group. Keith is a former PSOJ president and president of the JCSDA, the Jamaica Securities Dealers Association. He continues to make invaluable contributions to Jamaica, including being chairman of EPOC. His financial expertise has benefited not only JMMB and Jamaica, but even further. As I said before, he served as president of the PSOJ between 2019 and 2022 during a very trying time for the country, during the pandemic that was COVID-19. Today, we will hear from Keith directly as he returns to our program to talk a little bit about JMMB. So again, Keith, welcome. Great to have you back.
Thank you. Good to be with the Mayberry team. As usual, we have an excellent working relationship. Mayberry being the top broker, lead equity in the country.
Thank you, Keith. I appreciate that. And for a man who's been in the business for over 35 years, I think you know a thing or two about brokerage houses. And I mean, it's interesting. We said it in the introduction. I mean, JMB was really one of the first investment banks that came around back in 1992. Absolutely. I remember the day because I had started working 2 years prior. So I was a young 20-year-old at the time, and I've always had a desire to get into the space. And 20 years later, here I am. Good deal. So, folks, we want to look at the financial results for JMMB. So I'll ask the team to bring that up. I'll take a quick review of the numbers, and then we will jump into some Q&A with Chris. I remind you guys to send in your Q&A from now if you can, and we'll be happy to get to those questions as well. So, guys, if you could just bring up the first slide, we'll look at the financial results for the 9 months ended December 2023, and the results were nothing short of fantastic. Of course, I'll explain a lovely one-off gain in there, but generally I think still results were good. Gross revenues up by 13% to $40.9 billion. Net interest income unfortunately was down 24% to $6.4 billion, and we'll talk about the high interest rate regime and how that's impacted you guys. Fees and commission income also down by 10% to $3.9 billion. Good to see the gains on trading back up 43% to $5 billion. So you guys did really well there, Keith, in terms of the trading gains. Unfortunately, the total operating revenues net of interest expense, unfortunately, net was down 7% to $17.6 billion, while total operating expenses were up 12% to $6.47 billion. And when you put that all together, there was actually a 73% decrease in the operating profit for the 9-month period from $4.2 billion same period last year to $1.1 billion currently. Fortunately, when you think of JMMB, you have to think about Sagicor Financial Company, and so we have to account for the share of profits, and we saw a huge swing in the share of profits associated with SFC primarily, where the share of profits increased to $16.2 billion, and I'll talk a bit about that before. And so that has the net impact of the net profit for the 9-month period jumping to $16.99 billion. So great results there. Total comprehensive income of $24 billion. So that's great to see some turn taking place when you factor in the results of the group. And SFC, I believe, Keith, you guys own 23.44% of that entity. And that gain is primarily associated with the acquisition that they made of Ivari Holdings, Canadian-based life insurance entity, sort of mid-sized based entity that generates profits of about 86 million Canadian a year. So there was a acquisition, and on that acquisition, they generated a gain, purchase price gain, and Sagicor's 23.44% interest in that purchase price gain resulted in them scoring roughly a $14.6 billion one-off gain. So that $14.6 billion one-off gain, folks, is included in that share of profits. And I'll be making some adjustments for that and telling you why I still think the stock's a great buy. Total assets up to $726 billion, an increase of 14%. Shareholders' equity up a whopping 52%, up to $71 billion, again, primarily driven by that $14.6 billion one-off gain. What I like about the growth in total assets by 14% is we see the loan book up 14% to $203 billion, and they're doing very well in managing their loan book in terms of ECLs and NPLs. NPLs being non-performing loans and ECLs being expected credit losses. I have to be very careful when I say ECL these days, because we have a big bond raise going for ECL being Express Catering Limited, so not to be confused there. And then it's good to see also your investments and resale agreements, Keith, up by 7.6% to $365 billion. And also off-balance sheet funds invested on behalf of your clients up to $187 billion. So $726 billion on-balance sheet assets, $187 billion off-balance sheet managed for your clients. So it's a really it's a group that you have to respect. Total assets on balance sheet, off balance sheet, just about getting to $1 trillion, Keith. I think you'll be there in short order. Additionally, we can talk about the expansion into Barbados. You guys just recently, in October last year, so you were busy last October, you guys basically got the license to open up business in Barbados. I'll definitely be asking some questions about that. And October last year is when you also had this acquisition that Sagicor did. So October, you guys were pretty busy. Next slide shows what's been... Well, let's back up to this slide one more time. I did want to talk about the KPIs. So current stock price, $25. And because the trailing earnings are $23 billion, it looks like the earnings per share is... it delivers a PE, of 2 times. It's like, ridiculous. And that's because of that $14.6 billion one-off gain. Now, if you back out that $14.6 billion one-off gain, folks, you still have $8.5 billion in trading earnings, and you still would have a PE of 5.9 times. So even when I take out the one-off gain, the stock's still trading really cheap, 5.9 times. Now, I expect JMMB over the next 6, 9, 12 months, as interest rates come back down, to get to a trailing earnings on a regular trot of $10 billion. I fully expect that the business is going to get back to making $10 billion a year. They've done it before. It won't be anything phenomenal. And at $10 billion, let's say 12 months from now, and at a 10 times PE, guys, this means $5.11 earnings per share, $51 stock price. So when I say I believe JMMB is undervalued, if you believe they can get back to $10 billion, it's a $50 stock. If you just take out the $14.6 billion one-off and you used $8 billion training earnings, it's a $40 stock. So anyway, I look at it, I think the stock's cheap at $25. So that's my view on the stock price. The other slides, just for the sake of seeing them, guys, showed the trailing earnings. It's been spotty, high interest rates, huge one-off gain associated with the acquisition of Ivara Holdings. Next slide shows how the stock price is traded. The stock price has had a high of $33 in the last year and a low of $23. Today we see that $25. You can see it in the graph. It's up and down, but it's really on the low side. So it's definitely, from my point of view, Dan Theok, not too late to get yourself some JMMB at $25. In 12 to 15 months' time, I will change my name, or Keith will change it, if I don't see the stock at $50. It'll definitely be north of $40. That's like the low for me, and the high could be $50. So it's a great time to invest. Buy some JMMB. It's, one of those blue chip entities. If you're out there, you're a big pension fund, and you want to spend $200-300 million in buying some stocks, JMMB is your obvious choice. I think JMMB and NCB are both like really on the cheap, and I expect to see those stock prices doubling in the next 12 to 15 months. So that's my honest, hard view of it, Keith. Congratulations to the work you guys are doing. I look forward to bearing fruit over the next 12 months. Folks, in general, I think as interest rates trend down over the next, 6 months, 9 months, Keith, I think the stock market in general, there are just so many stocks that are undervalued. And we all appreciate that the prices of stocks are, generally speaking, inversely related to interest rates. And so in this high interest rate regime, I'm not surprised to see a lot of bank stocks in particular on the low. And so I fully expect, as interest rates trend back down, that this is going to happen. So Keith, you're a man that wears many hats. Let's talk about interest rate trends. What are your expectations over the next 6 to 9 months in terms of interest rates, globally and locally?
Yeah, thank you very much, Dan. Thanks for that question. And I think you have to put things in context of interest rates and the market environment. And you start globally with the driver of interest rates globally is the Fed.
The Fed.
The U.S. Federal Reserve. And, they have been... in December, we got signals that they were looking to probably take no interest rates by, make 5 incremental reductions from their 5.25 to 5.5 range. In January, and this is all data driven, right? Because the Fed and the market players, every day they look at the data that's coming out and they make bets on where they believe the interest rates are going to go. I think that there was a somewhat of a market consensus that interest rates would probably start falling in about March, and that was a December reading. I think where we are now is that we think that interest rates probably in the second half of the year, the Fed will make 2 to 3 moves to in terms of rate reduction in the second half of the year. So that pushed it back somewhat.
Right.
Other central banks benchmark themselves against what the Fed is doing. Because there's a differential between where you want to see your local domestic interest rates and where the Fed interest rates are, right? And therefore, there needs to be enough of a spread between the domestic interest rates and the Fed interest rates, so that there isn't a rush to if the differential is too small, the domestic interest rates are too low, then there is a belief that investors will go and invest in US dollars and drive an exchange rate depreciation, and as a result of that, that has an inflationary kind of bias.
Correct.
So therefore, once the Fed keeps the rates up there, then domestic interest rates are expected to remain at the same levels, right? So therefore, our belief is that in the second half of the year, you could start seeing interest rates. I think that's what you kind of shared earlier, Dan. That you believe that interest rates would come down towards in the second half of the year.
That's my expectation.
That's a very positive. That would be very positive. The markets have been waiting for interest rates to come down because it depresses the market. Because in a high interest rate, the cost of money expensive. And when they're using monetary policy to tighten up liquidity,
Yeah.
they're pulling money out of the system. So it
Correct.
makes it even more expensive.
I looked at the 30-day
Yeah,
auction,
BOJCD auctions at like 10%.
10% on 30-day money,
Right.
folks. And that's
So
not sustainable, quite frankly.
exactly.
Yeah.
You know what I mean? And so therefore, that it's really disruptive to the financial markets because your money is expensive.
Yep.
They tighten the liquidity up.
Yep.
And money is the stock in trade. Right.
Yes.
So it's a tough environment,
Yeah,
right? So
yeah. And to put that into perspective, I think it was
Yeah.
like $129 billion worth of CDs out there. So just imagine $129 billion
of liquidity pulled out.
of liquidity pulled out.
And many financial institutions have different kind of liability profiles.
Right, right.
You know what I mean? And some institutions have a huge, what I would say, deposit base, which is very cheap.
Yes.
And others are more present in the market, seeking funding from the market, and therefore it's driven by really market conditions, and therefore their cost of funds will be that much higher. So therefore, what you see playing out in the financial service arena right now is where those with the cheaper cost of funds are making a lot of money,
Yep, yep, yep.
and those that are have the expensive funds are and are investing and would their profitability will be marginalized by the expensive money and the higher cost of funds.
Right. So that brings me to my first question. So
Yeah.
when we see this $2 billion or 24% fall in your
Yeah.
net interest income for the period, it's
Yeah.
directly associated with what we're talking
Directly.
about.
So, when we look at the overall JMMB group, now, one of the things that we have always diversified.
Yeah.
So over the years, because we started as an investment house, a money market operator,
Yeah.
and that investment business line drove the growth of JMMB.
Right.
We used that growth, those profits generated, and the retained earnings, and we invested with it APOs,
Yep, 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 yep.
and we raised money from the market.
Record-breaking APOs at the
Exactly,
time, $14
and we
billion.
used that to fund fuel expansion and diversification.
Yeah.
So that's what works for JMMB, even in a financial, even in this market where it's a difficult operating environment, right? So we now have an investment business line, you have your banking business line, you have your funds management business line, you have remittances, you have payments, you have pension fund management
Yeah.
and administration. So therefore you have a diversified products and services. And you also have it across 3 territories: Jamaica, Trinidad, Domrep, and now Barbados.
Let's talk about Barbados. So
Right.
tell me a little bit about the thinking there in
Well,
terms of moving to
I don't think Barbados is going to be a big, winner in the
Right.
short term. I
Right.
mean, it's just that, the Barbados is starting now to open up their markets, even, relax their exchange rules, their
Yes,
foreign exchange
yes,
rules somewhat.
Yes, yes.
So maybe it's a time to get in, get a sense of the market, some capital market deals, and start to build a book in Barbados, because we're there. We're there right there in Trinidad. We're
Yeah.
right there in the region. We
Yeah.
used to be there with Caribbean money market brokers. We kind of pulled back, and therefore we're just there because, we can use scale
Yeah.
because we have teams in Trinidad that can really run that operation. And we actually moved somebody from Trinidad to Barbados, a Bajan young man, Michael Jordan, to run that operation.
Excellent. Obviously
Yeah.
not the Michael Jordan. But
Yes, hey man.
what I like about Barbados is, again, we talked about capital markets throughout the region, and Jamaica's just leaps and bounds ahead of the
for
rest of the
sure.
region
For
in
sure.
terms of capital
Definitely.
markets. It's great to see us moving over into Barbados rather than them coming over here and buying up
That's right.
assets. So
That's right.
I think it's a great move. I agree. You're not hitting a home run, but you are
Yeah.
getting in early. That economy is
It's
recovering.
scale because you have your group costs, and
Yeah.
therefore you're scaling up and you're adding through acquisitions or startups new entities that can dilute your costs at a group level.
Yeah, agreed.
Yeah.
Okay, tell me, what steps is the company going to take to mitigate against the high interest rates in general?
So our smart growth, right? So in this environment, and because we diversified, the investment business line globally has taken a hit.
Right.
And we have seen that the investment business line showed in the DR negative. They have been negative net interest income in the DR, in Jamaica, our net interest income in the investment business line has been impacted significantly. Gain on securities trade has been eroded significantly. So the investment business line, in terms of that repo book
Yep.
and that active trading of securities, has been significantly impacted. So investment business line has taken a hit. Now, what do you do? So therefore, so you can't continue to plunk capital behind it if the environment, while the environment is where it is.
Yeah.
So you have to use your diversification, and we move now. Where is it now that you get? We have a more optimal funding mix, funding our banking portfolio. And that's why you see the growth in loans. So rather than go out there and load up on government of Jamaica assets, we are now funding our banking portfolio. And we are now integrating our operations to be able to sell what we say is an optimal funding mix, a balance of current accounts, saving accounts, and fixed deposit accounts.
Right.
And therefore, if you average that out, your cost of funds is lower than your repo-based product, which is like almost pegged to the BOJ CD rates, right? So you're moving your business and you're moving your assets and you're moving your liabilities to fund banking and banking assets and that growth. That's why you would see the loan portfolio grow. And then you see the deposit portfolio also growing significantly.
Right.
Because then we're taking our clients and we're saying, let's get your transactional money, let's get your emergency money, and let us get your fixed deposit money that you used to have on the repos. And when you do a blend of those products, you get a cheaper cost of funds.
Right.
Also, on the loan side, what you have is that loans are variable. When we buy a bond and we repo it out, the bond is fixed.
Yeah.
Right. So when interest rates go up, there's no adjustment until that bond matures. It's not like in the days gone by, Dan, where they had a pure variable rate bond out there, right? And everything repriced every 6 months, right? You don't have that anymore. And that's why the investment business line would get hit also, because their fair value reserves get hit.
Yes.
Right? In terms of, because the price of the bonds fall off. And then you have the expensive cost of funds, funding an asset which was at 5 and 6 and 7%. And your now cost of funds is now 7 and 8%. So we have to, that smart growth means moving off balance sheet and into the banking business, right? And a more optimal funding mix to drive that growth, right? So therefore, that's the diversity. So you see the banking business line across the group has gone up to like 60% of earnings, reversing where investments used to be.
Right.
Yeah. So that's the strategy, and growing in a capital efficient way. So therefore, when you're growing your banking portfolio, you have to look at the risk-weighted assets, and therefore, you're growing your retail loans because they have lower risk-weighted assets, and then your SME loans lower risk-weighted, and then your corporate, and then you have your capital market side of the business now, where you do your corporate issuances, your syndications, and all of this now, and like you're doing express catering right now, which is a good issuance, a really good quality product bond. That's being done. That is more of that business that you will do. Then you sell them off balance sheet, and they can, and that's the kind of where we're going with JMMB and its business. So it's diversification across business lines that has allowed us to move off balance sheet and into banking, more fund products. So you don't have what you have is that we're creating stable NAV products, net asset value, where you don't have the volatility of the underlying asset. So it's stable NAV products that are being created off balance sheet, so that the investor now who does not like the volatility in their returns, they can get stable returns in a stable NAV fund. And also real estate will be exposed to real estate growth as soon as BOJ start to show us a signal.
So it's interesting. I've heard the governor Richard Biles saying that the expectations for inflation over the next year are that they're going to be a little bit higher than previously expected. How do you think that may impact his thought process around interest rates? He's expected that. He's accepted that inflation for the next 12 months is going to run a little bit higher.
Yeah.
How do you feel like that might impact their decision
we
on
don't like
interest
that too much,
rates?
right?
Yeah.
Higher interest rates for longer. I don't think any one of us like that, right? We would like to see interest rates moved on. We're hoping to get some surprises in the data that show inflation comes in within the range.
Yeah.
And then by the time the Fed moves, then the Bank of Jamaica can move to reduce rates.
Yeah.
You know what I mean? And then therefore, we should start to see some pickup, man, because the equity markets have taken a beat, man.
For the last 2 years,
It's really it's tough.
The good thing is that I think I have two thoughts on that. Our central bank was quick on the draw to increase rates. They were ahead of the Fed.
Yeah.
Like maybe 3 or 4 increases ahead of the Fed.
You think they'll be ahead of the curve here?
Yeah, this is what I'm hoping. This is what I'm hoping because, we could be surprised by inflation over the next 3 months.
Yeah.
And if they've accepted that the inflation will run a little bit higher, I really hope that, they'll appreciate that by lowering interest rates, they can still manage the liquidity, that there's so much more capital to be deployed to help with the growth side of the country.
Of course.
On the growth side, there's just so much more capital to be deployed. And I know we're coming into the silly season of a next year of election coming up as well too. And so I think everybody wants to see the growth agenda.
I think they really need to find a balance between the fiscal and the monetary.
Absolutely.
To address, because the keeping interest rates high, subject to the Fed.
Yeah.
Is because you have to keep inflation
under control.
Yeah. And that's because our lower income, more vulnerable population, they don't have a discretionary income. Yeah. And therefore, if prices move, they get hurt. We've seen that over the last few years. If you look at inflation over the last 3 to 4 years, it's probably in the cumulative about 30%. Mm-hmm. That's 30% of purchasing power eroded. Yeah. For the most vulnerable in our population, for everybody. Yeah. But I'd say the most vulnerable and our low income, those who earn lower incomes would be impacted, and it's really painful for them. And therefore, what is that mix of policies that can be done? Because raising interest rates also is impactful for that same population. While them carry a loan and them have their mortgage,
credit cards, and
stuff
credit
cards,
like that.
And it creates a really tough environment. So
it's good to see that we've finally gotten out of the cost push inflation and the vicious cycle of inflation, high salaries, inflation, high salaries, and so
that's exactly the spiral that they don't want.
Right. Right. And I think we've broken that. And so it's great. I'm looking forward to the new budget year, quite frankly, to hear all of the goodies that are going to come, driven by the silly election season, because I do think there has to be a focus on helping the poor, controlling inflation, but at the same time trying to push growth. We have to grow our way out of this problem. So I don't need to preach to you. I know you're the converted. We see the debt to GDP coming down really nicely, but it would be nice to see the GDP itself growing. We really have to figure out how to grow the GDP more aggressively. And I think within that environment, you guys are, JMB, you're obviously poised to benefit from the growth of the economy. Hey, let's talk about your credit ratings and how you guys have managed to keep up the confidence of the international rating agencies, multilateral funding partners like IDB Invest and others.
I think it's really diversification. I think it's really diversification and credit quality. Like in the banks, or loan portfolios have, really low, low non-performing loans, and so the credit quality is good, diversification is good across the group, and we're continuing to build the resilience in the group and kind of almost de-risking, in slowing the pace of that investment and repo business, and really expanding in other areas. So the risk profile is improving also across the group. And then what you're going to see is more sustainable earnings that will be less susceptible to those one-off earnings. Because what we want to see is consistent 10, 12, 13, 14 billion dollars
annual profit
earnings going forward, but consistently without any volatility in the earnings.
Absolutely. Let's talk a little bit about DOMREP. I mean, a lot of that growth hopefully can come from the DR. I mean, that's the biggest economy in the region, really, in the region within which you operate.
Yeah. And the good thing about it is that we just got the commercial banking license in the DOMREP.
Excellent.
Right?
Excellent.
So therefore, we're now positioned for growth. So we're going to put a lot of effort behind growing our commercial bank in the DR. We just standardized our banking platform, Temenos T24, across all 3 countries. So when you roll out a product, you can roll it out across all 3 countries. So when we roll out our money line, we roll it out across all 3 countries. When you roll out your Visa debit, you roll it out across all 3 countries. So that is the efficiency of standardization. It's not a perfect platform. It has given us some challenges, right? But it, we continue to improve it. improve the performance of that platform.
Operational efficiencies, your cost,
Yeah.
that there's an area for improvement.
Because you know what happened now, Dan, we built out and we invested for this diversification. So we went out and we built the capacity, built our group team. We built out the operations team for that we could add countries and business lines to this platform.
But this is a cost. I mean, you're paying close
Yes.
attention to.
Yeah, we're paying close attention,
Yeah.
especially now because
Yeah.
when you have revenue lines, it was subsidized by active trading, and especially in Jamaica, where we're able to trade, especially after COVID when interest rates came down significantly.
Yeah.
You made significant trading gains. Those gains disappear
Yeah.
in Jamaica because in the DOMREP we made gains because the central bank began reducing interest rates last year. They have held now. And we made significant gains in our dormant portfolio. They have held right now at this point in time. But in Jamaica, our trading gains were really, really low. So the investment business line take a big hit, that.
Yeah.
And therefore, we continue our diversification.
Yeah. Let's talk about the potential of DR. I mean, how much bigger than the Jamaican economy is that? And how much bigger is the potential, you think, there? I mean?
The DR economy is maybe about 5 times the size of the Jamaican economy, and the potential there is huge.
Right.
The capital markets aren't very developed. The financial services market aren't as developed as Jamaica. I think Jamaica is leading region.
The region, yeah, by far.
You know what I mean? And therefore there's more work to be done. But that's all opportunity.
Yeah.
You know what I mean? So I think we'll continue this steady growth in the DOMREP. We don't see explosive growth.
Right.
But we will continue to take market share in all the business lines. I think we're number one in terms of assets in the securities business in the DR, right? JMMB, Puesta de Bolsa, right? And but the banking business line is really small. We just got a commercial banking license. We have a pension administration business, which is like they're issuing no more licenses for pension administration.
Really? Excellent.
So we have that. That is all they're doing is managing pension funds, and they have strict pension laws over there. So that's good business. Or mutual funds, SAFI, they call them SAFIs. It's doing quite well, and that gives us diversification because the Puesta de Bolsa is on balance sheet, the SAFI is off balance sheet. Then you have your commercial banking, then you have your pension fund management. So you have great diversification in DR. So we're a good platform to build on.
Good.
In the DR.
I do look forward to it. I really do think, there are great opportunities
By
there.
the way, Chris Berry and Gary Peart joined us in the DR for some 10th or 15th anniversary, and Chris and Gary came over. It was great to have them.
We've been paying attention to the DR. We really do think it has great opportunity for Jamaica because the market isn't very sophisticated.
Exactly.
It's a much bigger economy from a capital markets perspective. Much bigger economy, but it's not.
And then what is happening now is that the capital markets so we're going to put some emphasis behind the capital markets.
Right.
There. We have Mr. Julian Mayer, who is Mr. Capital Markets, right?
Yes.
So, we're putting team members in both Trinidad from the cap markets. We're recruiting for the cap markets in Trinidad and DR.
Excellent. And how does the group plan to tailor your solutions, for folks like Barbados, folks like the DR, because they're culturally different.
Yeah.
But I think there's a need for capital.
Yeah. So, for example, interest rates in the DR are actually higher than Jamaica.
Oh, is it?
Right.
Okay.
And we're looking at working together with the JMMB Bank in Jamaica and the JMMB Bank in the DR to offer different solutions.
Okay.
Right. So there's nothing new about what we're going to do that we haven't done in Jamaica that we're going to do in the DR. There may be some nuances to it in terms of because the laws are different, etc. That we will have to make customized for the DR.
Here in Jamaica, your brand is really built around love, and there's a certain culture. Same thing in DR.
Yes, man.
Good.
I think they love it more than they love it more because
Brand Jamaica, it's big. I really appreciate it. Okay, folks, I see the questions coming in. I promise we're going to get to you in the next minute or two. Jamaican economy. And this is not politics at
Yeah.
all. I mean, it's just performed exceptionally well, Keith, over the last 8 years. I'm going to say 10 years, so that no one thinks
Yeah,
I'm
yeah.
targeting any particular party. Bounced back really strong from COVID,
Yeah.
pretty quickly. And I'm expecting a bounce back from the interest rates
Yeah.
coming down, which I really think is going to happen over the six to 9 months. I mean, how excited are you about the potential growth for Jamaican economy?
Well, I'm very excited because, I mean, in my role as chair of EPOC, I see the total tax revenues rolling in, right? And it underlines that there is underlying economic activity.
Yeah.
So there is, and people are looking at Jamaica. We have no foreign exchange controls, so money can move
Yeah.
quickly, and there's the stability of the economy, the stability of the financial services. We have a fairly developed country infrastructure. So therefore, technology, mobile, So therefore, we're in a good place, and therefore Jamaica is set for a growth on a growth trajectory. What we need is a human capital to get to work. And we won't talk about Project Star today, but we need to work on the human capital of our country. Education, right? No, we also, I think lessons learned from a Monday election and the signal has been sent to the whole political class is, listen, you can say you're doing it so good as an economy, but we're not feeling it.
We're not feeling it.
You understand what I'm saying? And so you can't say what IMF said this, who said that, who said what, and you're doing good and rating agency upgrade you. But the poor man are feeling
it's not trickling down, so to speak.
Send the signal big time. So,
and the government has to respond to it.
So people are listening.
The government has to respond to it. Are you guys positioned to take advantage of the opportunities in the infrastructure space in particular? I think over the next 5-10 years, the government has to be focused on infrastructure development. Yesterday's signal was water, and over infrastructure development, I think, is a key area to be focused on, and PPPs, right? Public-private partnerships. Is this something that you guys are willing to do?
Oh, definitely. And I think, that would take collaboration across the industry.
Yeah, absolutely.
Without Mayberry, without sales work with NCB Cap Markets, work with Mayberry, and you guys have always played in that space.
Absolutely. Huge syndications. I look forward to it.
So, I mean, I think you guys need to lead the way.
We're happy to.
Bring us to the team.
Happy to.
Right.
Okay, there are, a couple of questions piling in, so let me start to take them. First one I see coming in is from Mon Cherie, and she's asking, is a dividend in the offering for JMMB this year?
But
year, I mean.
Without a doubt.
Or this quarter. Mon Cherie, you mean this quarter?
Well, I mean, for the end of the financial year, we're going to look at it for sure, because, you can't deliver that kind of performance and then don't pay a dividend to shareholders.
Have to pay something.
And remember, we're baking into our budget process, dividends.
Yes.
So therefore, when you are doing your budgets and you're targeted for growth, you can't erode all the capital and all the liquidity. No. You have to leave some. You have to ensure that the shareholders have a dividend to receive.
Absolutely.
We're kind of transitioning because we're always let's us push for growth.
Yes, reinvest,
use up all the capital and fuel growth.
Yes.
No, we have some serious shareholders Proven, who beat us up over the head.
You need some dividends.
Saying, look here now, you take care of the shareholders with them dividends.
Have to. With the huge profit garnered by JMMB, is there a consideration of sharing a little with the shareholders? So that's the same dividend question. Wendell, thanks for that.
Definitely, but it's at the end of the financial year, March. We have to go through an audit process.
Yes.
And then when the board reviews,
you'll make consideration for some kind of dividend payment. Yeah, that makes sense.
And that's probably somewhere around June. That is because the end of your financial year is March 31st.
You need 90 days to get that out and make that decision. Okay, sounds good. Next question coming in from Jerome is, JMMB's core business is not growing. The outcome of the results, good or bad, is based on SFC. What's being done to address this matter?
Good question. So SFC, JMMB investment business line, if you pull those numbers together, business, we have deliberately kept that business flat, right? And because because in this interest rate environment, when your spreads are this narrow, and your ability to trade those bonds and deliver gain on securities traded, so you can get an overall risk-adjusted return, it's not there.
Right.
So where we have focused our growth is on the banking side. No, so therefore we get hit on the investment side. We make some money on the banking side, right? That would have at the operating profit level.
Yeah.
So therefore it compensates for the loss on the investment side. You make money on the banking side, right? And then Sagicor, which was a strategic acquisition for further diversification.
Yes.
When we made when we got the opportunity and made an investment in Sagicor in 2019,
Yes.
that delivers significant profitability. The insurance business line will do fairly well in a rising and higher interest rate environment
Yeah.
than banking and investment.
So it's again part
So
of the
we did not have a
diversification
huge
strategy.
insurance
Book before.
book before.
Yeah.
But now we have 23% of Sagicor Finance, which owns 49% of Sagicor Jamaica, which owns 100% of Mayberry in Canada,
Yeah.
which owns 100% of Sagicor USA, right? And these business lines are doing quite well. So that was a deliberate investment play. So when your investment and JMMB investment business line is down, the banking business line will perform creditably.
Mm-hmm.
The off-balance sheet will probably be stable, right?
Mm-hmm.
And therefore you would say then you have Sagicor now, which complements.
Yeah, I agree.
So
I agree
in
100%.
this environment where people are losing money,
Yeah.
right, then you're still able to deliver returns to your investors.
Absolutely. And again, folks, I want to make the point, CD rates for 30 days being at 10% is not sustainable. This is going to change, whether it's the next 6 months or 9 months, it has to change, right? And I think at that point in time, then you're going to see the traditional business lines of JMB really jumping. So great question, Jerome.
Yeah.
Great answer, Keith. But I just want to make the point that we're focused on the future, next 6, 9, 12 months. And this is why I'm telling you JMMB is a $50 stock. In 12 to 15 months, they will be doing $10 billion of annual
So what I would
revenue
say,
going
because Jerome, you would have had disruption in your business lines, right? And what you would have, if JMMB holds a bond portfolio at 6 and 7%,
Yeah.
and your cost of funds jump to 8 and 9 and 10%, that's negative.
Yeah. Yeah.
I remember the investment business line was the primary business line for JMMB up to 2012 when we acquired Capital and Credit Financial Group for diversification.
Yeah.
Then we would have gone with greater diversification in Trinidad when we were the commercial bank in Trinidad. And we bought the investment business from Lee Chin in Trinidad, AIC in Trinidad, to that, and then we expanded in the DR from 2005
I won't
forward.
even bother to mention that I've lost count. You've marked down by over $14 billion some of these fixed income instruments. So it's just a matter of time. Those are not realized losses. Those are just mark-to-market adjustments.
Exactly.
As long as the underlying assets are good, eventually as interest rates come back, that's going to come back to you.
Way above
the
regulatory requirements.
Regulatory
We're managing that very carefully. You know what I mean? For the banks, for the investment business, and at the group level.
Yes.
Yeah.
Good deal. All right. Some more questions coming in. We got about 3-4 more minutes. Devin, I think you're getting ahead of yourself, but I'm going to ask it. Is the next JMMB brokered IPO due this year or sometime next year?
No, I don't think that is on the cards right now. I think it is subject to market conditions, and our advisors, Mayberry would say, boy, it's good time, but I think we would like to see the stock get back to the levels that Dan project.
Yeah,
because our APO people came in at $38.
Yes, correct.
They need to see returns. Not true.
Yeah, absolutely. So here's another one from me on the back of Jerome's question: share buyback. What's going on with the share buyback program? Where's your headspace
we're doing
in that
so
regard?
in a limited way because the share buyback program, right? So it's not about just coming in and buying a one major block of shares looking. It's because what happens is that the stock will trade off on low volume.
Yeah.
So, a retail investor coming in and they want to go buy a car or they want some down payment for them house and them sell some stock. The market don't have a lot of liquidity and the stock sells off on low volumes.
Yeah.
We have to be there to backstop it.
Okay.
And that's what the buyback program is.
That's the main focus. Okay, I appreciate that. Marlene Taylor, I totally agree with you. Especially read the new Kingston location. So I have to go back to TY. So TY said, JMMB customer service is not as good as it used to be. Custodian fees on bond accounts increased over 400% without notifying the client, and those fees are deducted in an ad hoc manner.
Okay, so we're going to take that one on board in terms of fees. No, we have a fee policy that any product or service that we're delivering to our clients for us to charge for it has to be value added. It has to be value added. We're not into charging nuisance fees. We're into charging where we're providing a service and for cost recovery also, because we can't provide a service and we don't get paid for it, especially as we have to diversify our revenue streams. And therefore, if we're providing a service, but we have to provide it in a satisfactory way, what I'm hearing from you that this is not satisfactory and we have to get behind this. So we're going to follow up on this to find out what of the ad hoc nature of the management of it. But we are looking also, if we have to charge an average of market when it comes to value, in terms of delivering a valuable service to clients. Yeah. And we also want to be able to do cost recovery because, but we would also, if they were not going to, we're going to keep our no fees on some products, which are nuisance products that we would not want to charge fees on. Right.
Okay, sounds good. Well, folks, unfortunately, I see a lot more questions coming in, but Keith, we've run out of time.
Well, we could share those questions and our team could respond.
Absolutely. Happy to do that. A lot of folks getting excited about the potential of the business, the direction that you're going, the diversification strategy, etc. Keith spoke to most of the issues. If you watch it back, some folks may have come in a little bit late. I'm really satisfied with the direction of the group and very excited to watch the results of the next 6, 9, 12 months. We'd love to have you back in 6 or 9 months because I really believe as interest rates come down, we're going to see the main business lines jumping again, like the net interest income lines and the fees and commission lines, etc. So I think the group's very well positioned. Keith, you guys do a great job of what you're doing. You've got a good, strong market, good, strong balance sheet, really great team. And so we love collaborating with you. And I want to publicly thank you for the collaborations that we've done in the past. You're great partners when it comes to us doing a $40 or $50 million US raise. We love collaborating with JMMB because they're almost always there to support us, and we'd love to see more of that in the market. And it's going to be required to take on these large infrastructure projects that we spoke about earlier. So thanks, Keith.
Dan, you have to lead the way on those.
100%. 100%.
We don't want to do all the heavy lifting, Dan. You have to do some of the heavy lifting.
Yeah, absolutely. We love doing deals. That's what we do great at Mayberry. And as long as there's private sector interest that's credit worthy, that's what we do. Folks don't come to us for car loans and house loans.
Exactly. We take care of that. Right?
I'll leave that to you. You do a great job. That folks come to us with for business loans, and that's what we focus on. And with that, we're going to bring today's discussion to an end. And I'd like to thank our viewers, as usual, for tuning in. Your support is always appreciated. Big thanks to Keith for sharing his invaluable insights with our viewers. Thanks again, Keith. Appreciate it. Thanks to have you here. To our viewers, be sure to look out for updates on our virtual investor forum by following us on social media. We share all things forum related on our pages, our official social media pages, so please look out for that. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Remember, wise investors, slow and steady wins the race. Keep still, folks. Goodbye.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum. Investing in Jamaica.